Hi, I'm Hillary Cochin with Main Street Home Loans, and I am here to talk to you realtors in the state of Maryland, especially those of you who are working with first-time home buyers. I personally love working with first-time home buyers. A lot of it is because many of them are very nervous to get started, but when you break down the numbers, they see how easy and how beneficial it can be. So that being said, I do understand that first-time homebuyers especially are oftentimes apprehensive to speak with a lender. They're speaking with you, they're excited to tour homes, but they're not always excited to talk about money. So I want to make sure that when you guys are facing those objections, such as I'm not ready to buy, I don't have enough money saved, it's too expensive, whatever the case may be, I want to make sure that you guys have the information and the tools to properly educate those clients and to make sure that they know that speaking with a lender is in their best interest. So to do that, I've put together a presentation here. Now, I love this tool. This is a rent versus own scenario. These for now are, of course, some made up hypothetical numbers, but this is something that I tailor to clients to make sure that we're taking a personalized look at their finances compared to specific homes of interest. For now, this is a made up client paying $2,000 a month in rent, and we're going to compare that to 3 different loan options here. Now, the first thing that I've highlighted is the total monthly payment with these different loan programs. Now, oftentimes when people are buying their first home, they're comparing their rent payment to what will be leaving their pocket each month for their mortgage payment. So in this first column here, this first option, this is a 3% down, plain Jane conventional loan. So you'll see the total monthly payment is pretty close to what they're used to paying in rent. But I also think it's important to explain to buyers that when you have a mortgage, when you own a home, we can't just look at these gross payment differentials. We also have to consider potential tax benefits that I urge them to speak with a CPA about. And then also the fact that when you own a home and you have a mortgage, a portion of your payment each month is just lessening your loan balance. So every month, a portion of your payment is just going towards your principal balance, lowering how much you owe to us as the lender, and therefore your net monthly payment when you're making that comparison is pretty staggering. The other big item that clients and potential home buyers think about is how much cash do I need? So in this 3% down loan for a made up $350,000 property, they would be looking at just shy of $24,000. $24,000 for a lot of people is a lot of money. I completely understand that, but there may be other solutions. So there are a bunch of first-time homebuyer programs throughout the state of Maryland. This is just one of them. Now, there are qualification limitations. Like always, there are credit restrictions, there are income restrictions. And again, this is for people who have not owned a home in the past 3 years in this case. But this is something that the state of Maryland will give them 3% of their loan amount to use towards their down payment or closing costs. So while they set the interest rate on the first trust, because the down payment assistance, there's no interest on that. They're setting the interest rate on the first trust, but you'll see it's not staggering. The monthly payment is pretty similar. And the best part of it is that now out of pocket, they're buying this home with less than, or actually they're saving more than $10,000 out of pocket. So sometimes it's a case clients have that money, but maybe they can use it to pay off credit card debt that comes at higher interest, or maybe they can just keep a bigger nest egg in the bank. Whatever the case may be, again, specific to the client. Another popular program, and remember, these programs do change, but this is another popular program specifically for those buying in Montgomery County, Maryland. A buyer, a first-time buyer, can get up to $25,000 in down payment assistance. So $25,000, there's a lot of things we can do with that money. We can make a larger down payment, we can buy out mortgage insurance, or we can just come out of pocket to closing with a lot less cash needed. So you'll see in this last option here, they're taking $25,000 from the county. There's no interest on that money, but it does need to be repaid whenever the client sells, refinances, finishes paying off their mortgage in 30 years. But you'll see their monthly payment pretty close to what they would be spending if they were coming out of pocket with that 3% on their own. But in this case, we're using the $25,000 to make a larger down payment, and we're also using it to go towards closing costs. This client can get into this made up $350,000 property with less than $3,000 out of pocket. Love this program. It's incredible. The other thing that I want to point out is that I think it's really important for us to be explaining how real estate can be used to build wealth. A lot of times when people are buying their first home, it's not their dream home, it's not their forever home, but it can be a stepping stone towards that dream home. So I just, for now, put in 15 years net worth, what this can look like. Again, when you're renting, as you guys know, you're just paying someone else's mortgage typically, whereas when you own, you are building equity. We can also take information that you provide on specific appreciation potential in the zip code the client is looking in. A lot of great information here. Again, if you have any clients who you think that this can benefit, feel free to pass this information along. Or if you know anyone that wants a tailored rent versus own situation or a scenario, their rental payment compared to a specific property, please reach out. I would be happy to help.